Okay, well, hi everyone, and thank you for joining us here today. Wanted to take this opportunity to welcome you to our webinar on emerging risks in a disruptive world. And we have a very special guest here today, Darius Delon, who is one of our esteemed instructors in our risk management program, and is actually taking time out of his busy day today to be with us today. Darius is a risk management consultant, and he's also the past chair of RIMS Canada Council. He is the past president of the Southern Alberta Risk and Insurance Management Society, and he's been a risk and insurance practitioner for the past 25 years and more. He has worked with very large organizations such as the Calgary Board of Education that has over 100,000 students and 10,000 staff. He's also worked with organizations that have operations all across Canada with over 10 billion of property under management and post-secondary institutions with very diverse risk profiles. So welcome, Darius. Thank you again for taking the time to be with us today. I am going to turn it over to you and we can get started. So Darius, it's all yours.
Thanks, Marita. Welcome, everyone. I really enjoy all the work I've been able to do with York University, and risk management's, well, my favorite topic. So welcome to the York University webinar. As the name on the screen says, Emerging Risks in a Disruptive World. Risk management and disruption, they go hand in hand. As the disruption continues on and all the different ideas that people come up with in this wonderful world on how to deliver services, risk management's there coming up with identification and some options on how to manage risk. First and foremost, risk management's not about saying no. In my career, I've heard lots of people say, oh, you're just the guy that's going to tell me I can't do it. In fact, I'm the guy that's going to help you do it, but come up with ways of doing it that won't be also too disruptive to the organization if something goes sideways. And it's not about buying insurance, but we'll get into that in a bit. So a little bit about me. I had an interesting start to my career. I started in the insurance industry myself. I started as an insurance adjuster. So the person that, when you get into a car accident, I'm the person you'd call. And I had a chance to just see literally thousands of claims, because as an adjuster, you go through a lot, and all the different ways people get into accidents, incidents. I did more than just auto claims. I also did house fires, also fatalities, all the different ways that things can go wrong. I've seen many of them, and I'm sure there's many I haven't seen, but it's fascinating to see how people manage their risk and how they sometimes don't manage the risk at all. I also worked as an underwriter. I got a chance to see what a good risk looked like from an insurer's perspective. And there's a big gap between, any client and the perfect client for an insurance company. And I worked as a commercial broker. So I got a chance to see clients on a regular basis, and I've assessed literally hundreds of clients from a risk perspective on how their organization was operating, where the gaps were, and how they can better manage it. So, they didn't have these big things that blow up and prevent them from obtaining revenue. I also was the risk manager for a number of schools, like Marina said, Calgary Board of Education, University of Lethbridge, Mount Royal University, and also a real estate company that, for those of you in the Toronto area, probably know it as Triovest Realty. One of the largest privately owned real estate property management firms in Canada. And now I'm a risk consultant and instructor. So I get a chance to see clients today, what they're experiencing. And cyber is one of the biggest questions I get asked every day. And what do you do about it? What do we do? We'll talk about that in a slide a little later. So one of the things I wanted to talk about is, as I progressed through my career, I also progressed through my education career. I would call myself a continuous learner. I started off as a chartered insurance professional after obtaining a number of classes, and then a fellow chartered insurance professional. I got my CRM, the Canadian Risk Management designation. And a couple of years ago, I got my RIMS-CRMP, which is something similar to what you would expect for a CPA, kind of a capstone exam based on experience that kind of vets the people that apply for it, and those that are vetted and pass the examination process. This is the highest level of professionalism in risk management. And RIMS being the Risk and Insurance Management Society, and they're based out of New York. And the Canadian arm of that is the RIMS Canada Council. And we'll go on from there. So what is managing risk? You know, I think that's the biggest question for a lot of people to answer, because when they answer it, the risk isn't necessarily just the risk. It's a whole bunch of other things. And a lot of people, when they talk about risk, they talk about, oh, you know, I manage it, right? Nothing happens. Or my best example is, you know, if I was to ask everyone on the call right now, hey, we're all going to go skydiving. We're going to get into a plane and we're going to jump out. Each one of you is already managing the risk, right? Because my intent is that we just jump out of the airplane without a parachute. And as you know, our chance of success is pretty small. We'll probably hit the ground and it won't be a good outcome. But we know we're going to have a parachute. We're probably going to have a backup parachute. We'll probably have training on how to use the parachute. The plane will probably be a good plane with a good pilot. And then we're going to land in an area that'll be safe for us and probably without too much wind. So there's all these layers of controls in place, but all of a sudden we just embed them in what we're going to do and say, oh yeah, we're going to jump out of an airplane in a good plane with a good training and a good parachute. So you're managing risk. But what's the actual risk that we're trying to manage? What's the inherent risk? Death from falling out of an airplane, unmitigated. So once we kind of separate out all the different risks, the risk and the controls that we put in place, we find out what the actual risk is. And you know, sometimes the controls that we have in place for risks, you know, are too controlling. So sometimes we take some of those controls away and allow the organization to run better. But that's part of the identification and the analysis. So analysis, statistical probability. You know, it's kind of funny. In my line of work, I've met literally hundreds of professors at universities where every single professor would say when they're taking students on a field trip, you know, I've done this field trip for the last 20 years and no one's died yet. Well, you know, it's awesome that they have a great record, but from a statistical perspective, you know, doing one trip a year 20 times isn't statistically relevant. So what have other schools done? What is the actual frequency of how often someone on a trip gets injured? We never want anyone to get injured, but the reality is our own individual experience isn't enough to say that it will never happen. Just like if that same professor said, hey, I've gone on this trip for 20 years and I've never died. Well, if something does happen to them, they won't be saying the same story because, you know, statistically, they're not able to come back and say, oh, well, I've only died once. Analysis also involves legislation. There's new laws coming into place every month, every week sometimes, definitely a number of times a year from a federal perspective, and lots of legislation around privacy and environmental exposures and regulations. So today's trying to start up any project that would have been green lit 20 years ago is a lot more difficult because there's a lot more stakeholders involved, a lot more concern for the environment. That's a legislative risk that you need to deal with as a risk manager. So the first two pieces are all about the identification and the analysis. I've been doing the first two pieces forever. The third step is really where there's I love this step, developing the options. Because the reality is, it's not just the risk manager developing the options. You're working with a team of people that are experts in their field. You're solving something that wasn't solved before. Some risks have solutions. You know, going back to the earlier example of parachuting out of a plane, put on a parachute. Okay, someone else has done that, great. Oftentimes I'll do the same thing. What has someone else done with regards to this risk? Oh, great. Perhaps York University has done something with regards to their student off-site activities that I can borrow for MRU when I was there. So you share risk control measures, but sometimes they're brand new. They've never been seen before. Those are the really interesting ones. But you got to be careful. How much are you going to spend on your options to manage risk? Can you still actually operate your business at the end of the day, or are you going to spend $1 million to manage the risk, but you only have $500,000 worth of revenue? But identifying the risk, I think that's the key piece of the whole puzzle. If you can't identify it, you can't analyze it, develop it, implement it, or monitor it. And oftentimes people misread what the risk is in life. There's two types of two grades of the risk, one being an inherent risk and one being a mitigated risk. And I'm not sure if everyone was on the line when I had the story of, if I asked you all to go into a plane and we're going to jump out, you'd assume that we're going to have parachutes when we jump out. But in this case, no, we're just going to jump out. So our chance of success jumping out of a plane with no parachute is pretty small. But we have all these controls in place to reduce the risk of jumping out of a plane. Well, it's the same sort of thing that we do with other organizations. We try and figure out what the inherent risk is and what the residual risks are, and we manage it. Just like buying insurance. After buying insurance, my residual financial risk is a lot less. But I have other risks that will probably hurt my organization if I haven't managed those. And one key risk is always reputational risks. And we've seen that in lots of different incidences in the past. Also analyzing risks, statistical probability of something happening, not just, to me as an individual, as one person, because statistically I'm irrelevant, but, to 1 million data points, right? And 1 million data points will actually say, oh, there's this frequency of this happening, out of 1 million data points, it happens 5 times out of 1 million. Oh, but what happens is pretty severe. Oh, okay, then you got my attention. In analysis, risks aren't just hazard risks, like someone falling down or getting into a car accident, but there's risks that come out because of legislation, right? There's new laws coming into place. If you breach legislation like privacy, there's fines. That's a risk. That's the risk of a breach is one thing, but also then the risk of the fine being levied against you. And nowadays with privacy, you need to disclose the breaches to your privacy. And that's a huge reputational risk. And the law dictates that you have to disclose it. Developing options. What's the best way of managing this? Well, that's the tough question. What are you going to do about it? And when you do it, it has to be cost effective. And we go into this, the concept of cost of risk. Cost of risk includes insurance, premiums, deductibles, but also your controls. There's many times people have actually spent more money on control than they have on insurance, because perhaps the cost of things going sideways, right, it far exceeds the cost of your control. A good example of that is the BP explosion in the Gulf of Mexico. $30 to $40 billion worth of loss. Arguably, and I didn't get into very much detail on this, but it kind of came down to a blowout preventer and some cement. Quality of cement, quality of the blowout preventer. It's $100,000, $200,000. Does someone get put in place something that's a little bit more cost effective, but not as effective, right? So those are the decisions people make. Implement the solutions is my favorite. You have to be a good manager for that, a change manager, in fact. The most difficult part of the whole process is implementing change. You can identify it, you can analyze it, you can develop options, but then you got to get people on board with those options. And people hate change. And as a risk manager, you'll see that all the time. As a risk manager, you get a lot of different techniques on how to get people to buy in to that change. That's not easy, but it's definitely worthwhile. And then, of course, you monitor and amend what you've done. So what's risk? The potential for a loss. People kind of look at that from an insurance perspective. Here are the typical hazard type losses you can have. Fire to your house, your car, a flood, smoke, explosion, hurricane, quake, hail. These are all things that are very insurable. And oftentimes people will insure it and think all my risks are done. There are no other risks that I'm exposed to because I've already bought insurance for this. But you got to remember, you've only bought insurance. You haven't reduced the possibility of this actually happening to you. So a number of years ago, people in 2013 in High River, Alberta, they lived in a place called High River. I'm not sure if anyone caught that, but why was that town called High River? Well, they had a flood. Actually, it devastated the entire town. Could someone have done something to mitigate their flood loss? Perhaps. I think the writing was on the wall that in a town called High River, you might actually have high flows from the river every now and then. Do you build there? Do you build in such a way that you aren't impacted by the flood? Those are all different options you could have done. So insurance is not the only option, but the controls are really where risk managers do most of their work. So like I said, insurance is a good financial reimbursement. We all buy insurance for one thing or another, your car, your house, probably even mortgage insurance or the life insurance portion on your house. So there's various reasons people buy insurance. But managing risk goes beyond buying insurance, even though I do teach the risk financing course. And we go a lot further than buying insurance. New types of risk, disruptive technology. Uber, right? I love the concept of Uber. Someone thought of, hey, there's people with cars, they're not using the cars all the time. How about they use them more often and maybe they can get paid for it? And they use their own car. So it's not a yellow branded taxi that's always a taxi, but it's a contractor that is matched up with the marketing, right? Actually giving you a ride, finding someone that needs a ride with you that has a car that is able to provide them a ride. Great concept. I love it. But are there any sort of risks associated with that concept? There is lots of risk associated with it. Think of Uber themselves. A number of years ago, Uber had a privacy breach. They did not disclose a privacy breach, and then about a year later, they got fined to the tune of about $184 million. May or not been reduced on appeal, I'm not sure, but that's significant. So there's definitely risks to Uber, the company themselves. Also, the CEO of Uber was caught on camera in an Uber being not the most polite person. I'm not sure if you've seen that or not, but it's interesting. The actions of one individual in this very digital world can have a very negative impact to that individual's career and to the ability to sell the IPO for Uber. With the drivers, let's think of the most simplest of the risks. Who pays, or what insurance is there to pay for the accident while actually someone's driving a passenger to their destination? This was a big debate within the insurance industry. The insurance industry literally had to come up with a product that wasn't there before. It's called an SPF 9, so a special policy form 9. And Uber had a great idea. We'll buy the insurance just for the period of time that you've picked up that customer, driven the customer, and dropped off the customer. So let's say a half an hour, and that insurance for the car, the legal liability for the passenger is insured through Uber. That's a great solution. That's a solution that wasn't there before. So disruptive technology also has very disruptive solutions, and in this case, a disruptive solution from the insurance perspective. Airbnb, another great disruptor to the marketplace. Imagine you just have an extra room in your house. Times are tough. You want to rent it out. Do you want to rent it out to someone 100% of the time, or do you just want to rent it out to someone with a really good credit card one day at a time? Probably get more money renting it out one day at a time. But boy, is that ever a hassle trying to market out your one room in your house, for me in the middle of Calgary, to someone that wants to have a room in Calgary. Airbnb has solved that. Hey, they'll do all the marketing for you. Great idea. And all of a sudden people just come to them in droves wanting to actually rent out their space, getting lots of money for their space. It's a new industry, very much competing with hotels. But what do you get in a hotel that you don't get in an Airbnb, right? In a hotel, you have this big corporation that owns the building. Obviously, they have assets. In an Airbnb, you're renting a room for a day. Is it a good room? Does the room actually match the quality that's in the pictures? I don't know, have you ever been to an Airbnb? Has the room ever not matched? How about the privacy in the room, right? We've seen over the last little while some evidence that people put video cameras in private rooms in Airbnbs. Who are you mad about? Or who should you be mad at? Should you be mad at Airbnb because the provider doesn't have a safe and secure room? Or is it the provider? Does anyone even know who the provider was that had video in those rooms? Probably not. But everyone associates it with Airbnb. So their reputation is at risk. The value to their reputation when they're a multi-billion-dollar company. Can you imagine if this goes unmitigated and people continue to find cameras in rooms? Do you think people are going to be wanting to use Airbnb anymore if there's a risk that someone's going to be videotaping them? I don't think so. So they need to manage that risk. Did anybody think that was a risk at the very beginning when Airbnb came out? Probably not, right? It would have been nice if that risk was identified early on and have methods to actually manage it, right? Vet whoever it is that's offering up a room and make sure that they won't do it. Maybe there's an inspection of the room. Maybe there's also a contract in place specifically addressing privacy and expectations. A very big risk, and I can imagine if anyone ever found a camera in their room, they'd be pretty upset. This is one of my favorites, Turo. So Turo, for those that aren't familiar, because it's a little bit newer and not as widespread, is you can rent out your own car. In this case, the guy rented out a tricycle. I'm glad he's wearing a helmet. But imagine the quality of the car that you rent. I've been on Turo before, and some of the cars are awesome. Ferraris, Porsches, Lamborghinis, some of the best exotics, some very new cars. Also, some very older cars that maybe shouldn't be rented, cars that might break down as soon as you get the car, right? So, are you safe in a car that breaks down in the middle of the night on the side of the road, in the middle of nowhere? Who's responsible for the breakdown and the time and effort it takes to actually get you out of that breakdown situation? Is it Turo? Are they going to come to the rescue and actually get another car for you? Because if you rented a car from budget would say, oh yeah, try and come into the nearest budget. We have budgets all over the place. We'll get you another car. Just take a taxi there. We'll reimburse the taxi. What does Turo do? What can happen with some of the Turo vehicles? Budget has brand new vehicles, so their chance of breakdown is reduced because they're all pretty much 1 year old or less. Some of the vehicles on Turo are 5, 8 years old. Some are classics, great to drive, but sometimes a problem to actually continue to drive because there's some issue with the vehicle. And the risks to the reputation, again, of Turo. Reputational risk is not one of those things that's easily insurable or easy to finance. It's one of the biggest risks that can actually take down a company. From a reputational perspective, and this is not disruptive technology, this is existing, but does everyone remember what happened with United Airlines when that doctor was taken out of his plane seat that was oversold, right? It became a big fiasco. The reputation of the company was hit hard as a result of one incident. This is a huge company, but this went viral. In today's day and age, social media has an opportunity to really make a big impact on operations and stock prices. Or in this case, it was a double whammy with how the CEO responded to the incident, and then how people took that response and didn't think positively of it. So reputational risk is a huge risk to organizations, and you never know when you'll get hit by it. So one of my favorite word jumbles, of course, we're going to be talking about cyber risk. This jumble has just gotten bigger and bigger every year. I remember in the old days, hacking, people just try and hack into a bank. Why? Because, hey, banks have money. Well, banks are really airtight in most cases. So hacking into a bank isn't as easy as you think it is, or maybe it's lucrative, but just can't be done usually. So what do? Well, yeah, hack into anyone else. One that's a newer form of cyber risk is ransomware. They get into your system and they just lock it, right? And their passcodes are a lot better than your passcode or my passcode. and you have to pay money to actually unlock it. Interesting case in Canada of ransomware, and I know the people there, and they've done their own little marketing tour on ransomware. It was the University of Calgary. Someone was able to get in, and they locked up their system, and it cost them 20,000 Bitcoin to unlock it. So this is real. This is very Canadian. This happens. This is not something that's only done to American organizations, as we've seen from a privacy perspective. Uber in the last example. Gaining information from an individual. Some individuals are so important in organizations, they'll go to great extent to actually get the password information from that individual. Data leakage. This is the bring your own device. I've worked for organizations, oh yeah, just use your own phone, we'll pay you whatever to use your own phone. But how secure is my phone compared to a phone that's secured by IT, right? And then a phone secured by IT, usually you can't access all the features of that phone. Maybe you can't use the web, and that's maybe a security precaution. Hacking, a bank account, intellectual property, insider threats. Sometimes staff have a bone to pick with the organization. They'll take information because they want to, but some will also do it by mistake. You know, there's lots of examples of, oh, I had all this information on a laptop. Someone broke into my car, grabbed the laptop. The password on the laptop wasn't very strong, and all of a sudden a whole bunch of information gets leaked. There's also other examples of photocopiers. Photocopiers nowadays have a large hard drive. So what it does is it scans it, puts it into memory, and actually just prints out all the scanned copies. Does it a lot faster this way. But what happens to the hard drive when you sell or bring back that photocopier at the end of the lease, right? Do those hard drives get wiped? Lots of examples of those hard drives not getting wiped. So there's lots of different risks within the cyber realm. As we hit each one from an incident perspective, we go, oh, we're a little bit smarter today. But sometimes you want to be ahead of the curve and understand where the risks are before the risk actually happens to you, right? And that's the trick. That's really difficult to do at times. Before I go off of this page, I just wanted to kind of comment on, with regards to hacking, data leakage, Marriott, so the big hotel chain, had 500 million records compromised. This is about a year and a half ago. 500 million, that's a lot. So it wasn't just, you know, people's names and addresses. They had passport numbers attached to a number of those names. My comment to that was, why didn't they just destroy the passport numbers after the guest left the Marriott? And chances are there's value to that kind of identification, you know, saying hi to the person next time and, oh yeah, we already have your information here in our data bank, but is the risk worth it? So last I heard with regards to Marriott, they're spending about 200 million on that data breach. So was it worth it keeping passport data? And, you know, just to break down the cost of the passport data breach, let's say your passport's good for 10 years, it costs you $200 for a passport, and you have 9 years left on your passport, right? So then you go back to Marriott and say, hey, I need a new number because my passport was breached, and you're going to pay me 1/10 of the value of that passport. Sorry, 9/10 of the value of that passport in this example, right? So it's prorated. So potentially up to $200 per person that lost their passport data. So actually, as we look at it, 200 million might be a cheap out for the Marriott. You know what? It's not all about software. There was a recent hardware hack. Actually, it was recently disclosed, but it had been going on for a while, where motherboards on servers of various types, they had a piece of hardware added onto the board. So what would happen is you would ping the board. It would say, here I am, and it would give you a backdoor access to the motherboard. And perhaps that motherboard was in the office of the RCMP or Calgary Police Service or Toronto Police Service or the OPP. So where are they getting access? And it's hardware access. That's a hard thing to do where, hey, I need this sort of motherboard, please provide it to me. Okay, here you go, here's your motherboard. And what people were not doing were checking each and every motherboard to make sure there's nothing extra on the board. Many companies got caught by this. And we're talking large companies that have already cleaned out all their servers a couple of years ago. And that's why this story came forward, is after they cleaned up their servers and they have all new motherboards, now this story came to light. Because you'd be really surprised who got impacted by that hack. But you have to know who your supplier is. So supplier risk management, right? Supply chain and risk management go hand in hand. The better the supply chain, the better managed it is from risk perspective, the better it is for everyone. So obviously there was a gap in the hardware supply chain for a lot of these servers. Software, you buy software from all these people, and some software providers are Apple, and they say they vet all the software that's in the Apple store. Other software is not vetted, but hey, it's free. Free software? Gee, I wonder why the software is free. Where are you getting your money from, right? Is it an easy way of actually just accessing your phone? Maybe, right? And we're all susceptible to it. As an individual, I'm always very careful about the software that I load, but I'm sure as an individual, I'm just not aware of all the different ways that software can be loaded onto my phone. Have you thought about what software you have on your phone? Behavioral management. Oftentimes, staff are the weakest link. Have you ever clicked on that link? I call it the Nigerian prince scam. It was a Nigerian prince back in the old days when it was just email, and this prince had billions of dollars that he needed to get out of Nigeria. Everyone at that time had seen that email. Well, if everyone's seen the email, it's not good anymore. But now that email, it's the CRA. Hey, we have a refund for you. Wow, I wasn't expecting a refund. Awesome. I'm glad finally the tax man has given me back my money. Probably not. I just got an email today with a direct deposit notice with a PDF attached to it. It was like $8,000. Oh, just click here and you'll get $8,000. You know what? I wasn't expecting someone to be paying me $8,000. I'm pretty sure it's a scam. But people are motivated from various perspectives, money being one of them. Hey, could this possibly be $8,000? That would be awesome, right? But people, trying to train them to understand the various ways that experts or behavioral experts can get you to actually click on that link. They're pretty good at it. You'd be surprised. Be careful of what you click, and do take that training session through your company on how to better manage clicking on links. So I've added onto here also a couple stories. You can kind of access them at your will. So solutions. We talked a little bit about the solutions. Definitely managing hardware supply chain. If you were to ask me that 10 years ago that we had to manage hardware supply chain because someone's going to put a little node onto a motherboard, I'd say you're crazy. Not so much today. What's the next way someone will actually get onto hardware? Will it be hardware or will it be 5G? And you've seen Trump in the US all concerned about one of the phone suppliers that's pretty much a state-owned or controlled entity, giving them access to the 5G network, right? Do you not? Do you trust them? Do you not? And he's using that card as to whether or not to trust that phone company. Might be a lot of different issues going on here. One might be risk, one might just be negotiation. So I'm not 100% sure myself, but at least someone's thinking about or talking about managing the risks of intrusion. Software is a tough one. Anything that's free, why is it free? Maybe it's free because they're gathering your data, usage data, and usage data is valuable. If you can figure out everyone what their buying patterns are, awesome. I'm going to sell that data to Amazon. Amazon for sure is acquiring data such as that just from all your purchases. Hey, Bob, hey, Jenny, what have you bought in the last year? Oh, you know what? With what you've bought, we're going to send stuff that I know you'll probably also buy close to the warehouse near you in anticipation of you buying it. And then we're going to advertise to you and say, hey, this thing is 50% off. Now's the time to buy. Have you ever noticed that some of the advertising that comes to you is really targeted? It's exactly what you were thinking about the other day. How did they know? You told them. You just didn't know you told them. And of course, behavioral. Clicking on links, that's a tough one. Where's the email coming from? Is it a trusted source? And nowadays they're actually having email come to you based on an email address that's in your contact book. So you think it's a good source, but it's not. So, Bob at Hotmail has been your friend forever, but Bob got hacked. Now they're emailing everyone as Bob. It happens. What kind of controls do you have in place to actually understand that? So let's review. So we talked about identification of the risk. That's the first thing that we do. And we do it within the context of the organization. So you just don't identify risk by themselves. You go, hey, what does the organization do? And what is the organization at risk of? Every organization is different. There's some similarities, but every organization is different. Analyze it, right? We talked about that a lot. The potential for analysis is infinite. You can overanalyze for sure. I think the problem that we have right now is we underanalyze the risks that we have. We don't fully understand their impacts. And since we don't understand their impacts, we get impacted by them in such a way that, oh, I didn't know that would happen. Yep, I thought it would happen. Develop options, right? You have to do something with it. And by the way, sometimes what you do with it is nothing. You just leave it as is because you're now just more aware and your appetite for that risk stays the same. We talk about appetite within the very first book in the CRM courses, risk appetite and risk tolerance. That's a harder topic to master than it just seems on the surface because the tolerance and the appetite are often different for many organizations. And implementing the solution. For all those that are online, implementing the solution is really what you're here for. You can't just tell everyone the sky is falling and not actually come up with a solution to prevent the sky from falling. So hopefully we can all see that. And then, monitor and amend. So one thing I wanted to add to this, and it's not on the slide, but this is one of my favorite topics when we talk about developing options. I have 8 options that we can actually talk about. One is avoiding, right? So just not doing that, which is causing the risk. And let's say, if you're Walmart and you deliver all your own goods between stores, you sub out the delivery of the trucking operation between all the different stores to someone else, and they take the entire risk. Contractually, they're transferred to that risk. You can reduce your probability of something happening or reduce the severity of it, prevent it from happening, segregate your risk. So in real estate, you'll have 100 commercial buildings throughout Canada. I don't have to insure all the buildings in the total. I can just insure a geographic aggregation of risk. You can diversify, duplicate, transfer through contract, and also transfer through insurance. So the controls that are in place, and if you notice, only one of the controls is transferring through insurance. The remainder are risk controls that are based on what is it that you do. So it's not all about insurance, it's all about managing risk and different ways of financing it. So in the risk financing class, we actually spend a little bit of time on insurance, but we spend a lot of time on different vehicles that are available for financing the risk. And it goes outside of the insurance realm, but it involves quite a bit of analysis. So questions?
Hi, Darius. Can you
Hi.
hear me?
Yep, I can.
Okay. Hi, guys. My name's Raquel. I work here with the School of Continuing Studies. So while we're waiting for a couple of questions, Darius, would you be able to tell us maybe a little bit about the course that you teach in the risk program?
The risk financing course, we go through a number of different steps within the course, talking about hazard risks, which are very much insurable risks, analysis of those risks, analysis of incidents, and how to figure out how big of a loss you're exposed to. There is, I think it's called the Hertzberg model. There's a thought that for every one catastrophic risk or catastrophic incident that's happened, there's 10 large incidences. And if there's 10 large incidences, there's probably about 100 medium incidents, 1,000 small incidents, and 10,000 near misses. So we kind of go into some of that to kind of discuss, well, what's the probability of something happening and how big is that incident if it does happen? And then we kind of go further into what we just talked about with regards to the webinar on how to manage it, and how to finance it, what limits to finance for, and where to find the money. And there's different ways, different places to find the money to finance your risks. So that's kind of just a small little piece of the risk financing course. Of course, there's many different chapters.
At this point, I'm not seeing any questions in the chat, so I'm going to do one last minute. And this is just a brief reminder that the certificate in risk management begins on September 3rd. And if you enroll, you will have a chance to interact with Darius on his course.
Well, looking forward to seeing everyone that's on the webinar coming into the course. It's fascinating work. I love it. And I teach the risk financing course, and there's 2 other instructors, and Tony Rossi and Riaz Yuma teaching the other 2 courses, and they're as I am, they're also risk managers. So in the field, well established, and the 3 of us have great conversations sometimes.
Guys, I know we went a little bit over with the time, so I'm going to go ahead and wrap it up for today.
Okay.
Thank you very much for attending, Darius. Thank you very much for joining us.
Thanks, everyone. Have a good afternoon.
Thank you. Bye-bye.